welcome back. You're watching Taking Stock, and this was another week of bottom-up stock picking where individual stocks did well, but the market was down quite a bit. We're talking to our guests. Vinay, let's talk about a couple of other names, since it's really been individual stock story. Two other stocks that you like, Indian Terrain and CRM. If you could tell our viewers what's the story here and what are your price targets?
So, we had recently done some work on the apparel industry in India, and we had some very, very interesting insights. Now, apparel consumption in India, which includes the trousers, the shirts, and the ladies' wear and the footwear, totally per capita consumption in India is one of the lowest in the world. It's just about less than $40 per person. Equivalent number for China is 7 times higher and almost 10 times higher for developed economies like Germany and United States. So our per capita income is at about $1,700, and it's beginning to improve significantly. Indian economy is likely to touch $5 trillion in the next 10 years. So it's a fantastic story in which the per capita consumption and per capita incomes begin to improve, and people then tend to spend more and more on luxury items and branded apparel. So branded apparel then becomes a very interesting segment as far as investment is concerned. The second big trend that we are seeing is that fast fashion companies which can bring the fashion from the ramps in Milan and in New York to quickly to the stores, do very well. So the likes of Zara and H&M and Helen in China, these companies have done very well over the last 10 years. Zara incidentally has more market cap than TCS in India. Now, some of the Indian companies are trying to emulate that. In last 10 years, we have seen almost 150 brands being launched on the apparel side in India. And Indian total apparel brand market has almost 200 brands. So the biggies like Van Heusen, Louis Philippe, Peter England, these brands have now got sales of anywhere between 700 to 1,000 crores, which is a very, very respectable number for individual brand sales to happen. Modern retail is playing a very big part in this kind of a growth, where you are finding that chains which have got associated with modern retail, which have entered into malls, have done very well. So Mudra has done sales of just short of 4,000 crores with these brands, while Zodiac has sales of less than 300 crores. So chains which have got associated with internet economy and with modern retails have done exceedingly well. Now within this basket, there are two companies, 2 or 3 names which come to mind, which look very, very interesting. And Indian Terrain is one of them. It's a relatively smallish company out of Chennai. Parent was a BIFR case. This company was broken off. And in last 5 to 6 years, they have done very well for themselves. A 100 crore brand has now become a 300 crore brand. They are into men's semi-formal clothing, and they have been growing very, very aggressively. Almost 20-25% kind of a growth is happening. In between, the surges are much higher. Most of the manufacturing is outsourced, and the company is very, very good with designing and fashion. So net, the demand for this kind of a stock is going to remain very high. The total market cap of this company is less than 500 crores. So a 300 crore brand available to us at 500 crore, with most of the manufacturing being outsourced and very strong in terms of ROC and improving numbers, almost 12% EBITDA, which could improve by about 200 to 300 bips over the next 2 to 3 years. It's an interesting story, an interesting bit that one could look at.
Okay, that's an interesting story, an interesting find that Zara's market cap is more than TCS.
Oh yes, that's very interesting. I'm a big user of Zara, so I can vouch for that. But Vinay, I just wanted a follow-up question on that. Zara has in India is the joint venture between Trent and Inditex, right? So wouldn't you want to bet on a stock like Trent as well because of Zara's performance?
You could, but one must not forget that when you bet on Trent, Zara is not the only brand that you get. Trent is a much larger play, so there is no vanilla play on Zara in India, and that becomes a challenge. It's not just limited to Zara and Trent. You would have recently seen the listing of Cafe Coffee Day. For otherwise a very, very good company on the consumption side, the Cafe Coffee Day business, but once it got co-joined with coffee exports and other companies in which the promoters had investments, like Mindtree and so on, it became a kind of a discounted story. So that's a challenge which even Zara will face vis-a-vis Trent.
Oh yes, that point is taken. Anu, 2 trader favorite names this week, Reliance Communications and GMR. How would you approach them?
Well, both have sold off because of the way markets have been. I think there is some more scope for both to fall down. I would basically, GMR has fallen 14%. I think there is scope to go down as much as 1450 odd, so would stay off that. Reliance Communication is a sell on news, obviously kind of a news. So I would probably wait for that. That's also at about 80, 81, can go down to about at least 77. So would probably look at those levels before covering up shorts if somebody is short.
What about some of the aviation stocks, Anu? Would you want to trade any of them? Jet Airways was up 10% today, in the week gone by. And Interglobe, although there's not much of a history there, it's still up 40% from its listing price. Anything in that space?
Well, Jet, the chart is positive. So if one were to look, there is support around at 537, 538 levels. I would say if somebody wants to get a positive bias, if the markets stay a little negative and you get those levels, that would be great levels to get into. I would say keep a stop loss closer to 520. And I mean, if you look at the charts, the target's looking more like 610, 620 as a level. I mean, obviously, Indigo has a shorter history of it, but I think closer to, if you get that stock closer to 975, 980, because the history is smaller, so I would say that would be good levels to enter that stock. But as of now, I think Jet looks like a positive bias play to play on dips, if any.
Okay. Vinay, you have one more pick for us, Dalmia Bharat. What's the story here?
You see, we were generally looking at the cement space, and cement space is one of the sectors which will perform if the infrastructure demand picks up. Now, it's been on and off for a long time. A lot of people have bet on cement and lost repeatedly because the demand eventually did not materialize. Now, what's happened in last 5 years is that India has added almost 120 million tons of incremental cement capacity. The same number in the preceding 5 years was short of just about 75 odd million tons. Now, against this 120 million tons of demand being added up, we know what happened in UPA 2, and then again the economic cycle is going through such a tough phase that the demand is still yet to materialize. That makes cement space a pretty interesting bet, because you are picking up the stocks at relative valuations where the numbers are still not showing any positive traction. So Dalmia Bharat, interestingly, has become the third largest cement company in India after ACC Ambuja combined and Ultratech. It's got almost 24 million tons of capacity, which is either operational or likely to become operational in the next 12 to 18 months. It's a shade bigger than Shree Cements. That makes it quite an interesting one, because its numbers still do not reflect the kind of capacity it has built up and the capex that it has undertaken. So EBITDA, just to give you a sense, is still at about 850 rupees a ton. This could jump up by almost 40-45% over the next 12 to 24 months. This could go upward of 1100 to 1150 rupees per ton as per our calculations.
On that note, we're going to wrap up with this edition of Taking Stock. We'll see you guys again with all the market action on Monday morning. Till then, thanks for watching.